on the demand side, it's pretty phenomenal. You have a market there where last year 1.2 billion ounces of silver was consumed. That's like crazy. That's up 20% from the previous year. The estimate for 2023 is something in the order of 1.4 billion ounces of consumption. You've got the auto sector, just screaming along, absorbing as much as they can.
Keith Neumeyer, the CEO of First Majestic Silver and a leading authority in the mining industry, is astounded by the present demand metrics for silver. He recently appeared on the Jay Martin Show, where he shared his positive perspective on the future of silver. He emphasized the increasing demand metrics for silver and confidently projected that its value would continue to rise in the coming years. This surge in value is expected to be driven by the growing demands from both the industrial and investment sectors. Keith's profound observations shed light on the significant role silver played in various applications and its potential for further growth in the foreseeable future. He foresees the mining sector evolving into a more efficient business over the next decade, benefiting from a rising metal price environment. During the interview, he acknowledged that being wrong in the short term was a possibility, but he remains confident in the long-term prospects of the industry. Keith anticipates that when the market does shift, the turnaround will happen swiftly, catching many off guard. Expressing his discontent with the current silver price, Keith described it as a joke. During the interview, Keith also highlighted the misconception of silver being treated merely as a cheap substitute for gold, emphasizing that silver was a strategic metal indispensable for numerous applications. He finds it astonishing that more people have not recognized this, resulting in a continued decline in production. In this video, we will explore the insightful perspectives of Keith Neumeyer from the Jay Martin Show as he shares his valuable insights on silver. However, before we proceed, ensure that you subscribe to our channel, give this video a thumbs up, and don't forget to drop your comments and observations in the comments section below. Thanks, and enjoy the video.
I'm not too worried about the world economy when it comes to supply demand of silver. On the supply side, we're flatlined. The mining sector's kind of reached its limits on how much silver it can produce. Even if a couple of, like, for example, Pan American, they've got a couple of mines in abeyance that they're hoping for permits on, and I think one is a potential 15-20 million ounce producer, and another one's around the same size. But they're years into the future and so on and so forth. But you're in a 850 million ounce market, at least the mining sector supplying 850 million ounces of silver a year. So one mine here, 20 million ounces, or another, there, it makes virtually no difference to the supply side of the equation. I suppose if silver prices went to $100 an ounce, you might see a bunch of recycling come in. We did see peak recycling in 2011. We saw peak recycling at 250 million ounces of silver. Today, it's about 125 million ounces of silver, and it seems to be flatlined at that level. Some people, silver went to $50, so and a whole slew of silver came into the marketplace from recycling. So you'd have to at least north of 50 to get another whole whack of recycling metal back into the sector. Who knows? It's speculation, but nevertheless, on the demand side, it's pretty phenomenal. Two industries: solar panels, about 160 million ounces; automobiles, about 80 million ounces. So it's like 250 million ounces between those two industries, which didn't exist a decade ago for really any large degree, consuming almost 30% of the entire mine supply of silver. And both the photovoltaic or the automotive industry, they're not going backwards. These are growing businesses, and quite phenomenally. I just can't. I don't know why more people don't catch on to this, because there's 1.2 billion automobiles on the surface of the earth today. That's all automobiles worldwide. And last year, the automotive sector produced, I think, about 80 million cars worldwide, of which about 10%, call it 8 million, even call it 10 million. It wasn't that big. It was more like 7 or 8 million cars were electric. And so if you're how long is it going to take you to replace the icy cars, fuel cars, versus electronic or electric cars. It's going to take, who knows? The governments want to eliminate all fuel cars by 2030, 2035, 2040, some say. The automotive sector can't produce the amount of electric cars required to replace all the fuel combustion cars. So over that period of time, and if we're producing as a global industry, the automotive industry, producing, call it 9 million fuel or electric cars last year, consuming 60 million ounces of silver, you do the math. In an 850 million ounce market, and you want to, and the automotive sector needs to be producing 50 million cars a year, over 20 years, just to replace the current fleet. So you multiply those numbers out, and you basically have no silver left.
During the interview, in addition to emphasizing the significance of silver, Neumeyer also highlighted the consequences of bank failures and the dangers of bank consolidation. He also voiced concerns about the implications of central bank digital currencies. He expressed his views on the impact of dollarization on bank insolvencies and the overall macroeconomic situation. Moving to the recent failure of First Republic Bank and the potential for future bank insolvencies, Keith pondered whether this could lead to further bank consolidation among the major banks in the United States, highlighting the difference between the regional banking system in the U.S. and the more concentrated banking systems in Canada and Europe. He speculated on the potential motives of larger banks like J.P. Morgan and the speed at which bank closures and customer transitions occur. Let's return to the interview to hear Keith's thoughts on the consequences of bank failures, as he emphasized the dangers of bank consolidation.
Well, it's interesting. I think the United States is quite unique. I think, at last count, at least what I'm aware of, there's about 6,000 regional banks in the United States. That's very different than Canada and quite different than Europe, where it's very concentrated. I think in Canada, there might be 5 banks, maybe a couple of smaller ones, but 5 major banks. And these banks, do regional loaning, and often, high net worth people have their own account managers, and then they report through, the system into Montreal or Toronto, wherever the head offices are, where all the decisions get made, and that's just the way it is in Canada. In the United States, as you know, it's very different. It's led by these regional banks where high net worth, and well, not just high net worth, but all regional individuals, have their banking relationships with local banks, and then they're quite small in nature, and if they are not investing their capital well, and as the case has turned out, sorry about that, as the case has turned out in this one particular bank, things happen. And it's interesting because I was thinking about this the other day, and will we see in the United States whereby you only have 4 or 5 banks left, and all these 6,000 small regional banks eventually get gobbled up? I think there's an effort to do that. Quite honestly, I think that the J.P. Morgans of the world are licking their chops and probably wanting to see more of these types of failures, because it's quite interesting how quickly it happens. On Friday they announce a bank is going to be shut down, and by Monday morning it's back to usual, and the customers aren't affected in any way yet. All those accounts have now been moved over to one of the major banks, and everyone's got a smile on their face. And that's what CBDCs really give you, is no other option. And that's what I don't like. If you want to use an electronic transaction at wherever, at Walmart, then okay, fine, that's your choice. But if you want to use cash for a transaction, that should also be your choice. And unfortunately, the direction is to eliminate that choice, which I think is not a good thing. Diversity and having your funds maybe spread over multiple bank accounts. Not just having all your eggs in one basket. Possibly have different trading platforms. I'm not so much worried about having this, a stock portfolio, for example, taken away. I think those shares are yours, and they're electronically deposited. If the bank goes bankrupt, I would I couldn't expect those shares would just disappear. They're registered at, the big trust companies, and they're quite separate from the banking system. But cash in itself, that's really where the risks have been. And yet we've seen in the United States that there's actually no risks, to have deposits. So it's a very, unique phenomenon that we're experiencing. I don't know if that's going to be, happening in Europe. We saw Credit Suisse, taken out by UBS, and all the depositors were whole. So, maybe this is the new trend. Maybe the banks or the governments, pardon me, have decided that depositors are will be kept whole. I guess that's a good thing, but there is cost to it at the end of the day. But I think gold and silver. You have to have some physical gold, you have to have some physical silver, mining shares, and then just be diverse among where you're banking.
With a positive perspective on silver's value and increasing demand metrics, Keith anticipates continued growth in the coming years. He predicts a rise in silver prices and views it as a hedge against inflation, attracting investors seeking to protect their wealth. What are your thoughts on Keith Neumeyer's insights into the future of silver and the mining industry? Share your thoughts in the comment section below. If you found it helpful, don't forget to give it a thumbs up and subscribe to our channel for more videos on gold, silver, and copper. Make sure to click the notifications bell so you don't miss any of our future uploads. Thank you for watching.